Sometimes we need to call the doctor when the market is at a crossroads. So we have called Dr. RSI, Andrew Cardwell, to join us and have a discussion about the current market. Hello, my name's Bruce Fraser, and you are watching Power Charting. Andrew, welcome.
Good morning to you out there. We're halfway through our morning.
Yes, we start and we get talking before we begin the recording, and it just the next thing you know, the day is gone.
That's right.
Yeah. So, well, we're glad you're here.
It's truly a New York minute here.
Yes. Now, before we start, one brief announcement, and that is that Damon Pavlatos is going to present for the TSAA in a webinar upcoming for members, and it's using market profile and volume analytics with traditional technical analysis. It's going to be a great program, and just at the homepage, join, become a member. Everybody should be a member of TSAA, not-for-profit society oriented towards technical analysis education. So with that, let's get started. Andrew Cardwell. Yes, go ahead.
And with us, it's not only education, it's entertainment when we do a show.
Well, you can't go through 40 years of this without trying to be entertained some of the time.
That's right. And
yeah.
Entertain, inform, and educate.
Yes. Well, it's I've had many years in the classroom, and Andrew, you're a great educator, and it just makes the whole journey that just more special and fun. And
follow the yellow brick road, right?
Yeah, that's it. So Andrew is the developer of the Cardwell RSI Edge, which you may be familiar with from prior programs or from other courses that you've done with Andrew. He began his career in 1978.
I'm an oldie.
You are an oldie. And Andrew is a great educator. He has students in 28 countries. His students love his courses, and they will refer other students to the courses, and as Andrew says, 70% of his students have been referred by other students. They're never prior students, Andrew. So
no, they're current students.
Always.
I still coach. I work as a coach for this team now.
Well, and your people are very fortunate, and I'm fortunate to have you as a dear friend, and I'm glad you're here. The one thing I want to say is that they are currently doing work on Andrew's webpage. And so if you would like to go to his website, use this link here. Also, you can email Andrew and certainly sign up for his Twitter feed. Okay, so with that, Andrew, I'm going to turn the screen over to you, and let's get started and talk about current market conditions. So okay. Here we go.
Thank you, Bruce. I enjoy the time we have. Let's share and let's see what we have. Everybody's
there you go. I can see it.
Yeah, I bet everybody's going crazy with everything we have going on, not just in the technical world, but in the geopolitical world. The tweets flying back and forth, the trade war, we'll call it. It could get worse. It could get even more volatile. So you need to read the charts. And I share my interpretation, or translate, I guess is a better word, what I've seen in markets over the last 40 years. And for those who are listening for the first time, I did it with pencil, paper, and graph paper, calculating spread RSI values every afternoon for 10 years before I got a computer. And the market will show you what it wants to show you to lead your way if you know enough to follow it and to read it. As I've told Bruce before, one of my truisms is you don't know what you don't know until you need to know it. Now, I know that sounds confusing, but it's your money. Get yourself an education and learn how to read what the market is showing you. All I do with my classes is teach how to interpret what the market is telling you is going to happen. It's price, momentum, time, and sentiment all rolled into one. And that's not a plug for my courses. I don't sell courses, I offer help. So with that being said, this is one of my go-to charts. This top chart, it's got some proprietary tools, but overall, these are not Bollinger Bands. These are bands we do on moving averages, the highs and lows. The green line is the 9-period moving average. Now, if I zoom out.
And this is daily bars right now.
Daily bars. If I zoom out, you'll see how when that moving average, that 9-period, gets above what we call the high line, it's a strong trend. And the more you trade, the more you risk. So when you make a trade, know what your risk is before you make the trade. To me, it's always more important, where am I wrong? I think it's going up, great, but where am I willing to admit I'm wrong? And I always tell people, you can win a batting title batting 350 in baseball. You're only going to get a hit 35 out of 100 at bats. But traders tend to hold on, dollar cost average when it moves against them, and just make the situation worse, because now you're losing it twice as fast. So you owe yourself an education, because knowledge is power. And today's technicals will write the headlines for tomorrow. One of my favorite charts is just a plain bar chart, and being able to see the overall trend. Anybody can see, oh, that made a low back here, but most people don't realize it till it's moved. Get an idea where that low is, and this RSI is, I've been with my best friend, I guess, for 40 years. The approach doesn't change, only the names of the markets. So I wanted to share this because there's so much going on with the chart. People are calling for double tops and could be going sideways for a while. But overall, just a couple of little tricks that I use and teach is everybody's, oh, I know RSI, you sell 70, you buy 30. No, that's not necessarily the case. That's what Wells's original work was. You look for bearish divergence at the 70 level, you look for bullish divergence down around 30. They are just, when bull and bear divergences show up like we had here, I'll just get a regular arrow. Okay, price had gone up to new highs, but the RSI did not. It failed to confirm that new high. That's a bearish divergence. That is not necessarily a reversal signal. And down at the bottom is my own personal RSI, which I call the CFG. And it showed the same type of divergence. And then we had another rally, a sell-off, and then a rally back up, but we never really went below 30. And sometimes you'll see them on TV or webinars. People are trying to teach my work, and they say, oh, it's at 30, it's time to buy. No, I have what's called range rules. 80 and 40 for uptrends, 60 and 20 for downtrends. So if it goes below 40 and starts dropping, and these are two moving averages on the RSI that I use, when they drop below 40, then you're starting to get acceleration to the downside, like we've had in big, strong moves.
So the first thing you look for is for the RSI itself to fall below 40, and then you look.
Just identify what the range is. Is it in an 80-40? Here it got up to about 76.
I guess what I'm saying is that if you're in an 80-40 uptrend range rule, and then all of a sudden the RSI falls below 40 after being in the upper range.
It's a range shift.
That's a range shift. And so you
same as if it breaks 60 on the upside and you see that 9 moving average, it's a 9-period simple on close, it goes above 60, you're starting acceleration. Like we had way back in January this year, we made a low, the RSI come up and it crossed the 50 level. Then the RSI got up to 70 and only came down to about 48. Went up again. You can see right through here, let's see, 40 would be right about here. So it never went below, the RSI never went below 40.
So it's in the upper
range.
Upper range area, and it's confirmed by the moving average, the 9 period.
Right, that 9 period tells you when you're going into acceleration. And up here is about 80. And you can see when it got up near 80, it got a little extended and came back down.
Now, back in in July of this year, and this was covered in power charting, we were doing point figure analysis of that top area where you have a divergence in the RSI. You just drew that. And that count, that point figure count that we took intraday, went right down into the area of the lows that it fell to very quickly.
Right.
And it was just a great point figure count. But I love the notion here, just thinking about combining these two powerful methodologies, is that when you had an upthrusting action at the July peak where it made a minor new high, you had divergence from the RSI, also accompanied with a point and figure count that had a pretty dramatic count for a move, in this case a decline. And then you combine that with the RSI, which is diverging, and that's a very interesting set of combinations here that could be utilized. Now, here recently, and I want people to go back and at least watch the first part of power charting from last week, is that in the month of September, you can see here that there's a classic distribution that formed in the month of September. And now that didn't have an upthrust at the end, but we took actually 3 point figure counts of that area in the S&P, and it went right to the intermediate counts and bounced, worked beautifully. And you can see that work from last week's episode. But notice what's going on in the RSI. The RSI has gone from being pretty at a pretty high level and has started to decline and make lower highs with the index itself. So, Andrew, I'm just throwing that out as a possible combination of these two great methodologies.
I think so. You and I have talked before. A lot of times, like this back here is what I call one of my positive reversals. The RSI the price sold off hard. The RSI got lower than it was prior, but it became more overextended at a higher price, which is what I share in my coursework and what I'm known for, the positive and negative reversals. I take the difference and add it to the high. So this, technically, the way I approach it with my work is it should have gone to new highs. So that's a positive reversal, saying it should have turned up and chopped around to confuse everybody before it actually took off. But if you notice, when it went up this next time, this blue line is drawn at about 60, 59 to 60. The range was starting to shift. It wasn't able to get back above 60. Even the moving average come up and bumped its head on 60 and it's declining. So it's an area right now where I think extreme caution. If something, with all the tweets going back and forth about the trade war and, somebody not happy, and then, oh yes, we're going to have an agreement. No, we're not. And I mean, that's just part of it.
Yeah.
As Jeff Kennedy always says, the market will do the most it can to adversely affect the most people. And I'm just warning people, because we put out warnings back in July that this market was not what you think it is. And then it sold off and everybody was calling, well, is this the end of the world? Is the market over? I said, patience. You need patience and discipline to be a trader. I said, no, it's just the first leg down. Turns into a positive. It should have gone to new highs. That's what I call a positive reversal failure. So this last low, we had a nice low close. I drew a blue line in here. That's a key support level, right around 28.46. If it takes that out with the 9 declining, we're probably going to test these lows. And if that's taken out, there's really no support until you get down to 2,800 and then 2,750.
If you take this whole point and figure count in the month of September on the S&P, which we've done that and published it, that count goes down to your lower support line.
Mm-hmm.
And so we've already touched the intermediate counts, and that produced a pause. And so the market has gone into a short-term trading range, but there is a larger count for lower prices that goes down to this deeper support area.
I can see it going down to the lower one, 2,750.
Yeah, and that's where the count is.
And with these positives, when these positive pattern now, in this case, it was a longer term positive, I draw what I call a positive reversal trend line. You notice that 9 on close, the green line, come down, stayed above that trend line and kept it going to the upside. But recently, it broke our center point, which we call the number, and it's in the process of breaking the low line. And if it breaks that low line, we're going to have a lot further to go, because that'll confirm these lower targets and also confirm your lower targets, because the Wyckoff and RSI combinations, when you and I have the same numbers, and that's what I enjoy about our friendship. We do laugh, we do entertain, but we try and inform people ahead of time. It could be headed this way, and now we're starting to get more confirmation.
Well, those spooky moments scare me.
I love them.
When everything lines up.
It's like, as long as I've been doing this, the RSI will talk to you if you know how to listen and what to listen for. But I'm watching our time. We've only got about 12 minutes left. But the fact that this did not get much above 60 and then turn down. When I zoom in on this chart, the opposite of that positive reversal is where the RSI goes to a high, sells off with price, and then goes to a lower high and becomes more overextended to the upside. We're in the situation right now where we may have that. And this would create a negative off of this number. Roughly, what is it there? 2952 and 2937, 15 points. Well, it's telling me it's going 15 points below this. That'd be 2879, 15 points below this, 2879. What is this, 2872? And then eventually it's probably going to take out the 2847 by 15. Minimum target would be long-term target would be around 2830, which is back to the lows. So now this was daily. And real quick, let me look at the weekly, because I'm not a short-term trader. You know, I've always had people at lectures I've done and presentations say, wow, with what you use, you just going to make 5 or 10 day trades. I said, I'd rather put a position on Monday, take it off a month later, and make 10 times what I'm going to make in a day. These are starting to turn down. Now, these lines here were based on the lines or the closes we were using on daily. But that's starting to turn down because I see the 9 starting to roll over. And this was that positive reversal trend line that we drew based on a daily. And look how it's come right back up to it from the underside. You never sell on the initial break of a trend line. You wait for a rally and a retest, because that trend line should be resistance. So on an RSI weekly basis, your support is around 2840. And that's a pretty good drop from here. It's going to scare a lot of people. That red line is pivot point. Traders on the floor use pivots for resistance, support, trend change. And it's usually high plus low plus close divided by 3 to get that red line. But I wait to close twice as much because it's more important. And it's also important because that's where your account's balance is reflected in your closing price. The monthly, I even looked at the monthly before. We're in a point where this RSI is still losing a lot of momentum. And if it starts to turn down monthly, daily, weekly, back in July, I was looking at that close because on a monthly, we had a bearish divergence on a monthly. It's usually just an overextension, but this was pretty tight. The tighter the signal for divergence or positives or negatives, the stronger the signal. And where the monthly was showing it, the RSI only got to 63 and never got back up to that 70 level. So I'm just telling people, be very alert, be very careful, because that daily that I said could be potentially a negative is not showing up in the 70 or 60 level. It's right around less than 50. The lower the sell signal or the higher the buy signal with the positive or negative show up, the stronger the signal. So to get a negative reversal pattern form below 50 does further influence the downside and give more confirmation that it's trying to go down. But let me get over to a couple others because we're starting to run real short on our time, aren't we?
You know, this is like going to the doctor. You know, when you go to Dr. RSI, it's like going to the regular doctor. You just don't get much time with the doctor.
No. No, I have a new
Before you're
client.
in there,
I have a new client that while you're in there fixing one thing, why don't you tune the engine up, and it'll run better. But if you see something that shouldn't be there, take it out and get rid of it.
well, we just don't get much time with the doctor.
All right, let me switch to I've been bullish gold, and I think your Wyckoff count has been pretty much bullish the gold.
Yeah, gold's been a great campaign for a while now.
Yeah, and I've been bullish up until a couple brokerage firms agreed with me, and then that's when we put in that recent high at 1600 or at 1650. Or 1550. I'm sorry. I like being. If you're standing alone, always remember, if you're the smartest person in the room, you're probably in the wrong room, because you have to get education and never stop. I learn something every day from every person I run into. But look how that 9 stayed above. Look at the moving averages on RSI up here. They got up to 75, and then it went sideways for a while. Then it went up there again.
So the range rules are hard at work.
Oh yeah.
Yeah.
And the moving average on close is hard at work because it's staying above 40.
Yeah.
And it went above 60. And then we started to build this longer term divergence, fair divergence. And it was about this time that I heard a lot of brokerage firms agreeing with my targets and saying 1550, 1600. I said, must be near a top. We formed this last divergence. Here's a tight divergence, followed by another tight one. And then it rallied back to 58 and sold off. So on a daily, gold is a market that's it's not usually going to make a spike bottom. Silver makes spike bottoms. Gold tends to build a base. And if this were to hold, you're going to have somebody say, there's left shoulder, here's head, here's right shoulder, and we're headed higher. I still believe longer term it's still up because I'm looking at the weeklies as well. And that 9 is well above our high line. And the RSI moving averages are well up. And all these bounces or sell-offs down in here are well supported. And it's like a basketball game. Somebody takes a shot. When that ball bounces off the rim, you'll see a couple hands come up and keep tapping it up there. They're playing the game above the rim. This is what we're heading into, I think, with the gold market. The other thing is the dollar. And if they keep lowering interest rates, this dollar has been strong, strong, strong. It's weekly. Quick look at the daily. Daily's still strong, but I think it's starting to lose a little gas. It's burned up a lot of momentum. We're not seeing the RSI get up to where it was. It's having trouble up around 62, 63. So we might be watching that for some type of top. I will not short this dollar. You can talk to my clients. I've never said sell dollars. And they said, what do you think what's keeping it up? I said, everybody talking about it.
Well, the
Strong,
dollar's been quite strong, and gold has been strong.
which is not normal.
Not normal. And if the dollar starts to show that it has some kinks in that uptrend, then
Yep.
that could be real supportive of higher gold prices.
I believe so. I'm having
Yeah.
targets 1650. And if we break 1650, I can see 1850, 1900.
I've got some huge point and figure counts on gold, and
Yeah. I can
we
even see
the
above
readers of the
2000.
blog, we've been following gold for a long time, and gold looks like a major campaign.
I followed gold. It was one of the first markets I started with on paper charting, graphing the values on every afternoon on dailies. And I remember gold 350. And I was setting these positive reversal targets for 450, 500. Everybody in office told me I was nuts. Our chief technical analyst for the brokerage firm said, Andrew, I don't know what you're looking at. I said, it's up. And it looks like it's going to go higher. So same thing with silver. Silver went from under $4 to over 50. Markets don't lie. Traders do about their golf game, their sex life, and their score on the golf course. But the market doesn't lie. Listen to what the market is saying, see what it's showing you, and get yourself, on the right side of trends. One last thing was interest rates. Where did I put my interest rates? Real quick, because I know we're down to about 2 minutes. Okay, indices, 10-year.
Time just flies when you're
having fun.
when you're at the doctor's.
Yeah. There we go. Everybody this year, coming into this year, said the dollar or interest rates were going to bottom and go up. Look at this chart. That 9 stayed below. Look at all this. Move this out of the way. This is put the 60 level in. This is the 60 level. Never really got above it. The trend stayed down. We had negatives along the way. I didn't see any positives in there. Now you got a little rising, but bullish divergence, folks, is not positive. It just shows it's overextended. You need to follow, you need to see the positive reversals to turn it up, and you need to see the range shift. And the other thing that we were pretty negative on was the crude oil. It's in a wide trading range between probably 62 and 52. But I'm thinking from where we are now that we're probably going to go down and try this 52. But if we break 52, there's 50. And if I zoom out, there's not much else until you get down to much lower levels at like 45. That was my forecast off this last high. From 62, I said 52 support, and below that's 46.
Wow.
And I haven't seen anything to change it.
Okay, so Andrew, we have about 30 seconds left, and any thoughts, any summaries that you'd like to make?
Just that I think you have to be very leery in stocks. Make sure you've got stops underneath to protect yourself, or consider buying puts. Look for gold to move higher the rest of the year. Look for commodities, which are still in a broad basing and base building phase in all different markets: coffee, sugar, grains. But I think we're getting ready to go in an inflationary cycle, and I think Fed, if I could say it, is behind the curve.
Andrew Cardwell, thank you so much for being with us, and we're going to have you back soon. Take care.
You too. Thanks, Bruce.